Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York. It is Tuesday, the 14th day of April, 2015, and this is the daily report for gold and silver. Although well off of the lows of intraday trading, we do have gold down, trading off about $5.5 on the day, 1192.80. You can see that it's had a dramatic low at 1183. We're going to talk about that, and it has had a high of 1200.20, so just at 1200 on the high on the day. Silver also trading lower today, but off only about 9 cents, 16.19. That is the current print on the screen. The low 15.97, the high 16.33. We'll touch on silver in a second. So traders, first to gold. If you recall from yesterday's show, I talked about a potential setup on a trade, actually implementing a short position in the market. It was based upon a couple of factors, and we did not issue that sell signal today, and I want to qualify what caused me to kind of hold back on actually issuing the sell signal today. I still think that that could actualize itself, but there were a couple of parameters, a couple of things that I saw that kind of held me back. The first thing is, when we take a look at this market, we certainly got our dark cloud cover the other day. Now, typically you want to get that after a defined uptrend and kind of catch it at the top, something like this pattern here. Whereas in this case, we have had the market really trading kind of sideways for a little while, although the market has been in a defined uptrend, so it does meet that criteria. The second thing that we're looking for and we're looking at was this confirming candle. The following day has to be a red candle with a lower low and a lower high. Although it met that criteria, what kept me away from actually issuing that is, as I watched the market trade last night, we went and we touched upon this low. This is a 50% retracement of this rally here. So from here and then down to here is a 50% retracement. It bounced off of that point with a tremendous amount of support and actually traded just at and slightly above the 38% retracement level, apparently finding some sort of support. Now, the fact that this candle was solid red last night as the market was trading lower gave me the indication that we would probably trigger that signal itself. However, couple of things that we were looking at, it bounced back off of this. We did not see the MACD cross, and when we dissect the market in terms of what really precipitated, what kind of loss we were seeing, what we saw was incredible dollar weakness actually moving that market down further and having the weak dollar actually kind of go counterintuitive to what we're looking at. Let me show you what I mean. So traders, what we're looking at is the Kitco Gold Index, kitco.com. You can always get to it. And if you take a look at actual selling within the market actually took this market down about almost $15, $14.20. It was the weakening dollar that added to gold, and therefore your net change was only about $5.70. So when we look at the market within this context, what that does tell me is that the market was truly under pressure as it hit these lows once we came into the New York markets, of course, and the dollar really began to weaken. That pushed gold up off of these lows, and right now we've got some support at 1182, which is kind of where we pegged it at. And my sense is with this bottom here and the fact that it bounced off, I certainly want to see if this becomes supportive or if this can break through and therefore see lower prices. Because one model that we can make with this recent activity is you've got this low here, you get your high, you obviously get a higher low here, you then get a higher high here, and now we have again a higher low. So a case can be made for the market moving up. Now, the one thing we want to watch is if this particular MACD crosses, if we get follow through, it's certainly a sell signal because my target should that happen, comes in at around 1170. That's my initial target, and it's really based upon this area of support right in here that we've gotten these bottoms here. So that would have been my target had we gone short. But as I said, we didn't get the cross, and we didn't get real follow-through on the sell, even though the market is trading down $5. What is troublesome in terms of making a short play here is the fact that it really bounced off of this 50% level, and that to me shows some real support in the market. So traders, as I said, interesting day in the market. Now we are looking at our daily dollar index chart. You can see this red candle here. This represents today's trading activity, and it is certainly a moderate move to the downside with some real resistance, in my opinion, now at 100 on the dollar index. S&Ps, as you can see from this half-a-day E-mini, S&P 500, we had a nominal move to the upside. S&Ps closed higher, Dow closed higher, NASDAQ closed a little bit lower on the day. Crude oil is also rising back again, now trading at around $53 a barrel. You can see that on this weekly chart, 1, 2, 3, 4. This is the 5th week now, assuming that it closes in this area, that the market is closed above the open on Monday, is closed higher on Friday. That's what these green candles on a weekly chart mean. The one thing that we can see is that on a technical basis, we could easily run into resistance at 55 a barrel. You can see that right here, the last attempt to come up. It did stall at that point. But the one thing that we want to really take into account is we're not looking at $100 a barrel oil anymore. And that cheap oil, I believe, as we've talked about before, at some point is going to really spark a lot of the economies around the world, not just the United States. And so we should see the equities markets continue on their upward path. Lastly, do want to take a look at silver. Now, unlike gold, silver actually did give us the cross. It gave us that cross on the MACD yesterday. However, at the same time, it really came off of these lows much in the same way. Once it touched just below 1600, 1597 being low, it also popped back up. You can see it really coming off of these lows. The dollar weakness obviously having a lot to do with today's moves in the market. But my sense is that patience is the wise move at this point. Want to see if it finds support in this area. I certainly don't want to sell the lows in the market itself. And I'm more comfortable actually selling this market if it breaks below those designated areas that we've talked about both in gold and silver. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.